What is the primary role of an insurance broker in the insurance distribution process? A. Underwrite policies on behalf of insurers. B. Act as a claims assessor on behalf of clients. C. Act as an intermediary between clients and insurers. D. Provide administrative services to insurers. The correct answer is C. Act as an intermediary between clients and insurers. Explanation. Insurance brokers are licensed professionals who act as intermediaries between clients and insurers. Their primary role is to assess clients' insurance needs, source appropriate policies from the market, and provide ongoing service, including claim support. Brokers are client-focused rather than working for an insurer, which differentiates them from agents. Which of the following best describes the broking value proposition? A. Selling insurer products at discounted rates. B. Acting on behalf of insurers to increase market share. C. Offering tailored advice, product comparisons, and claims advocacy. D. Limiting liability by referring clients to insurers directly. The correct answer is C. Offering tailored advice, product comparisons, and claims advocacy. Explanation. The broking value proposition centers on client advocacy. Brokers offer customized advice, access to multiple product options, not tied to one insurer, and support through the claims process. This enhances trust and helps clients make informed insurance decisions. When conducting a risk assessment, the insurance broker is primarily aiming to A. Determine how much commission they will earn. B. Identify insurable and non-insurable risks. C. Promote the most popular product in the market. D. Comply with insurer underwriting guidelines. The correct answer is B. Identify insurable and non-insurable risks. Explanation. A core component of the broker's duties is to assess the client's exposures to loss. This includes determining which risks are insurable, such as fire or theft, and which are not, such as reputational damage in most standard policies. This risk profile informs policy recommendations. A broker is legally obligated to represent the interests of A. the insurer. B. the underwriting agency. C. the reinsurer. D. the client. The correct answer is D. the client. Explanation. Insurance brokers are agents of the client, not the insurer. This fiduciary duty requires them to act in the client's best interests when recommending coverage, handling claims, or disclosing material facts. This ethical obligation is reinforced by ASIC regulatory guidelines. What is the role of the National Insurance Brokers Association (NIBA)? A. Provide capital to insurance brokers. B. Issue insurer licenses. C. Set professional standards and advocate for brokers. D. Manage claims on behalf of insurers. The correct answer is C. Set professional standards and advocate for brokers. Explanation. NIBA is the peak body for insurance brokers in Australia. It advocates for the profession, offers education via NIBA College, promotes ethics via the NIBA Code of Practice, and lobbies government and industry on behalf of brokers. During the client engagement process, wise conducting a structured fact-finding essential. A. It helps avoid lengthy legal contracts. B. It provides pre-filled policy documents. C. It ensures the broker can issue a claim on behalf of the client. D. It documents the client's risk profile and supports compliance. The correct answer is D. It documents the client's risk profile and supports compliance. Explanation. A fact find is a methodical way of gathering and recording information about clients' operations, exposures, and risk appetite. This supports the recommendation process and is vital for compliance with KIC and anti-money laundering laws. Who are underwriting agencies typically acting on behalf of in the insurance market? A. Clients. B. Reinsurers. C. Insurers. D. Brokers. The correct answer is C. Insurers. Explanation. Underwriting agencies act under a binding authority from insurers, allowing them to accept risks, issue policies, and sometimes settle claims. They are not brokers, and their primary duty is to the insurer. What is one key difference between a broker-client relationship and an insurer-client relationship? A. Brokers offer higher policy limits. B. Insurers have no regulatory oversight. C. Brokers act in the best interest of the client. Insurers do not. D. Insurers are allowed to give legal advice. Brokers are not. The correct answer is C. Brokers act in the best interest of the client. Insurers do not. Explanation. A broker is the client's advocate with legal and ethical duty to act in their best interest. Insurers, while required to deal fairly, ultimately act in their own commercial interest and underwrite according to their risk appetite. Why must brokers comply with AML anti-money laundering counter-terrorism financing laws? A. To avoid giving financial advice. B. To detect and report suspicious financial activity. C. To sell life insurance products only. D. To avoid exceeding premium thresholds. The correct answer is B. To detect and report suspicious financial activity. Explanation. Brokers are reporting entities under AML legislation. They must verify client identity, keep records, and report suspicious transactions to OSTRAC. This helps combat terrorism financing and money laundering in the financial system. When recommending insurance policies, brokers must ensure that the cover A. aligns with current market trends. B. includes the most exclusions possible. C. is based on the broker's income potential. D. meets the client's identified needs and risk profile. The correct answer is D. meets the client's identified needs and risk profile. Explanation. Brokers must conduct proper needs analysis and match policies to the client's specific risks and priorities. Recommending inappropriate or inadequate coverage can result in regulatory penalties and reputational harm. Which of the following insurance products typically provides cover for loss of income due to an interruption in business operations caused by an insured event? A. Public liability insurance. B. Professional indemnity insurance. C. Business interruption insurance. D. Management liability insurance. The correct answer is C. Business interruption insurance. Explanation. Business interruption insurance is designed to cover the loss of income and operating expenses a business incurs as a result of a disruption caused by an insured peril, e.g., fire, flood. It helps ensure business continuity during the restoration period. A claims-made insurance policy provides coverage A. only if the incident occurs during the policy period, regardless of when the claim is made. B. for any claim made at any time as long as the policyholder had coverage at some point. C. only if the claim is made while the policy is in force, regardless of when the incident occurred. D. for claims made within 1 year of the policy's expiration date. The correct answer is C. only if the claim is made while the policy is in force, regardless of when the incident occurred. Explanation. A claims-made policy responds only when the claim is made and reported during the policy period or extended reporting period, regardless of when the actual event occurred, provided it happened after the retroactive date. This contrasts with occurrence-based policies, which cover claims from incidents occurring during policy period, regardless of when the claim is made. Which of the following covers would typically protect a business from legal liability due to injury or damage caused by their products? A. Business interruption insurance. B. Products liability insurance. C. Professional indemnity insurance. D. Workers' compensation insurance. The correct answer is B. Products liability insurance. Explanation. Products liability insurance provides protection to businesses for claims arising from injuries or damages caused by products they manufacture, supply, or sell. It is especially critical for manufacturers, wholesalers, and retailers. What is typically the purpose of an insuring clause in an insurance policy? A. To list the premiums and fees to be paid by the insured. B. To define the key terms used throughout the policy. C. To state what risks and perils are covered by the policy. D. To specify who the insurer can sue for contribution. The correct answer is C. To state what risks and perils are covered by the policy. Explanation. The insuring clause outlines the scope of coverage and specifies what the insurance company agrees to cover in the event of a claim. It forms the backbone of the policy and is critical in understanding the obligations of the insurer. In a commercial motor fleet insurance policy, what would typically be covered? A. Fines and penalties imposed for driving offenses. B. Damage to company-owned vehicles used for business operations. C. Public liability of passengers in private cars. D. Personal medical expenses of drivers injured in accidents outside work. The correct answer is B. Damage to company-owned vehicles used for business operations. Explanation. Commercial motor fleet insurance covers vehicles used in business operations against risks like collisions, theft, and third-party liability. It ensures businesses don't suffer major losses due to vehicle-related incidents. Which of the following is a key advantage of comparing multiple insurance quotes? A. It guarantees the lowest possible deductible. B. It enables clients to assess the trade-off between coverage and premium. C. It allows the broker to avoid underwriting disclosures. D. It ensures all policies are exactly the same. The correct answer is B. It enables clients to assess the trade-off between coverage and premium. Explanation. Comparing quotes lets brokers and clients assess the value offered by different policies. not just price but also coverage, exclusions, and service. It helps in making informed and tailored decisions. Which of the following would best describe professional indemnity insurance? A. Covers loss of income due to supply chain disruptions. B. Covers damage to physical property caused by fire or flood. C. Covers legal liability for financial losses caused by errors or omissions in professional services. D. Protects businesses from liabilities arising from the use of vehicles. The correct answer is C. Covers legal liability for financial losses caused by errors or omissions in professional services. Explanation: professional indemnity insurance protects professionals, e.g., consultants, accountants, from client claims related to their professional advice or services, such as negligence or mistakes. What is the role of a broker in obtaining quotes from insurers? A. Automatically accepting the cheapest quote. B. Preparing accurate underwriting submissions and providing material facts. C. Selecting the insurer with the highest commission. D. Avoiding full disclosure to speed up the process. The correct answer is B. Preparing accurate underwriting submissions and providing material facts. Explanation: a broker must ensure insurers are given the full and accurate picture of the client's risk. This builds trust, helps obtain suitable coverage, and avoids claim denial due to non-disclosure. A key difference between cyber insurance and property insurance is that cyber insurance, A, is only required by companies and developers. B, covers loss of digital assets, data breaches, and cyber extortion. C, provides coverage for physical damage to servers and hardware. D, includes coverage for bodily injury from online harassment. The correct answer is B, covers loss of digital assets, data breaches, and cyber extortion. Explanation: cyber insurance addresses intangible risks like hacking, data theft, and ransomware attacks. Property insurance, on the other hand, focuses on tangible physical assets. Which of the following best describes a sublimit in an insurance policy? A, the deductible payable for each and every loss. B, a lower limit applied to specific types of claims or risks within the policy. C, the minimum amount a policyholder must pay as premium. D, the total amount the insurer will pay for all claims in 1 year. The correct answer is B, a lower limit applied to specific types of claims or risks within the policy. Explanation: sublimits are caps placed on certain types of losses within a broader insurance policy. For example, even if the total limit is $1 million, theft might be limited to $50,000. Which of the following is the most appropriate step when a client requests the removal of an insured item midterm? A, advise the client to wait until the renewal date. B, cancel the entire policy and issue a new one. C, process an endorsement and notify the insurer immediately. D, suggest the client contact the insurer directly. The correct answer is C, process an endorsement and notify the insurer immediately. Explanation: midterm adjustments, including the removal or addition of cover, are handled through endorsements. It is the broker's responsibility to process the change promptly and communicate it to both the insurer and the client. This ensures continuity of cover and compliance with the agreed policy terms. Why is a pre-renewal review with the client important in the insurance broking process? A, it allows the broker to sell additional products regardless of need. B, it helps ensure that clients' changing needs and risks are considered before renewal. C, it avoids the need for remarketing or rebroking. D, it guarantees low premium for the next term. The correct answer is B, it helps ensure that clients' changing needs and risks are considered before renewal. Explanation: the pre-renewal review enables brokers to reassess the client's situation and risk profile, helping ensure that the coverage remains suitable and adequate. It's also an opportunity to update details, explore market competitiveness, and provide renewal advice. Which of the following is a best practice when managing a client's claim lodgement? A, refer the client to the insurer's website and let them lodge the claim independently. B, help the client fill out the claim form and communicate insurer requirements. C, submit complaint on behalf of the client to the regulator immediately. D, advise the client to wait for the claim to be automatically processed. The correct answer is B, help the client fill out the claim form and communicate insurer requirements. Explanation: one of the core responsibilities of a broker is to assist the client in submitting claims, which includes helping with claim form completion and guiding them through insurer documentation and process requirements. This support helps improve client confidence and claims outcomes. When might a broker refer a client to the Australian Financial Complaints Authority of CAT? A. When a claim dispute with the insurer cannot be resolved. B. When a premium refund is issued late. C. When the client wants to change their policy term. D. When a quote is higher than expected. The correct answer is A. When a claim dispute with the insurer cannot be resolved. Explanation. FCA is the external dispute resolution body that clients can approach when internal complaints or disputes, such as claim denials, are not resolved satisfactorily. Brokers play a key advocacy role in guiding clients through this escalation pathway. Why is it important for brokers to retain records of advice and client correspondence? A. To prevent the need for client reviews. B. To support future marketing campaigns. C. To sell client data to third parties. D. To ensure compliance and protect against liability. The correct answer is D. To ensure compliance and protect against liability. Explanation. Maintaining detailed records of advice, disclosures, and correspondence is essential for both legal and regulatory compliance. It provides a transparent trail of communications and decisions, supporting both client protection and the broker's legal defense in disputes. What is the primary function of a RAN broking system like Sunrise Exchange? A. Providing automatic premium discounts. B. Managing social media client campaigns. C. Facilitating electronic insurance transactions and client relationship management. D. Tracking competitors' product pricing. The correct answer is C. Facilitating electronic insurance transactions and client relationship management. Explanation. ERM and broking systems streamline insurance transactions, assist with quoting, endorsements, renewals, and claims, and help manage client interactions. Sunrise Exchanges, a widely used system in Australia that enhances efficiency and compliance. A broker is legally required to provide a client with which of the following before giving advice? A. A license renewal form. B. A promotional flyer. C. A statement of account. D. A financial services guide. Effigy. The correct answer is D. A financial services guide. FSG. Explanation. An AG must be provided to clients before personal or general advice is given. It outlines the services offered, how the broker is paid, any associations or conflicts of interest, and complaint handling processes. What is a broker's role under the General Insurance Code of Practice? A. Avoiding written communication with clients. B. Only following insurer directives. C. Ignoring vulnerable customers to protect insurers. D. Ensuring ethical conduct, timely responses, and fair treatment of all clients. The correct answer is D. Ensuring ethical conduct, timely responses, and fair treatment of all clients. Explanation. The General Insurance Code of Practice sets out standards for ethical conduct, timeframes for client communications, and responsibilities toward vulnerable clients. Brokers must uphold these standards to maintain public trust and regulatory compliance. What should a broker do before rebroking or remarketing a client's insurance at renewal? A. Immediately switch providers for cheaper premium. B. Wait for the insurer to cancel the policy. C. Notify FCA of the proposed change. D. Obtain the client's consent and assess changing needs. The correct answer is D. Obtain the client's consent and assess changing needs. Explanation. Before remarketing or rebroking, the broker should engage in renewal review with the client to determine whether their needs have changed and whether more suitable or competitive option is required. Consent and transparency are essential. Under a 6 RG 146 requirements, a broker providing general or personal advice must A. Be a registered real estate agent. B. Avoid giving any advice related to claims. C. Hold a Tier 1 or Tier 2 accreditation and understand licensing obligations. D. Only work with one insurer exclusively. The correct answer is C. Hold a Tier 1 or Tier 2 accreditation and understand licensing obligations. Explanation. A 6 RG 146 outlines the minimum training standards for those providing financial product advice. Brokers must be appropriately accredited, Tier 1 for personal advice, Tier 2 for general advice, and operate within the scope of their license or under an authorized representative arrangement.